Hi friends, so let's start today's analysis. I think a very disappointing day for the markets today since we closed below 22,800. Uh, but I think 22,800 probably just a number, and closing below it does not entirely takes away our opinion on the markets, etc. Although yes, psychologically the number has been breached and we have closed below 22,800 probably after seven continuous sessions. In the intraday, we touched around 22,720 odd, which is probably the lows of 6 June 2024. So we've lost the rally of around, let's say, 7 plus 2, 9 months, which is giving you a sort of a good time correction. And in terms of price, also, it's a very decent correction, which we've already been talking about from last 1 month or so, that our valuations have now become pretty benign. But we'll go into detail into our markets. Before that, we just start with the global markets as usual. So yesterday, I think we had a decent fall in US markets yesterday around, especially Dow, which fall around 1%. Intraday it was around 650 points down, but it slightly recovered in the last hour or 1.5 hours, and it closed around 450 points down. The reason was Walmart. And it's not that its earnings came very badly. It has actually beaten the estimates, but only the commentary of Walmart didn't impress the markets. Walmart actually told that they'll be seeing pressure in their margins in the forthcoming months to come, and tariff war will also be, affecting their margins and performance. The markets didn't like that, and probably we saw a fall in the U.S. markets. Apart from this fall, the dollar index fall very sharply, and it actually closed at 106.5. So there was a fall of around 0.65 percentage points, 0.65 points, which is pretty deep. Also, the bond yields fell and they came to around 4.5%. So, in terms of those indexes, we had a relief. Today also, UP opened stronger, around 10 to 12 paisa, but eventually during the trading day, it slipped off and we closed around 10 paisa lower. But if we talk about all the broader, parameters which we were watching for so many months, which was causing fear in terms of our minds, which was dollar index, bond yields, rupee. I think in last 7 days I've been saying this has topped out, and we will not be seeing now those kind of levels again. I still remain with my view on that. It's not looking that we are going to see major changes in these parameters, which were actually causing the FIIs a concern in terms of emerging markets. So that's one. Uh, Apart from that, I think the biggest reason which I will foresee, which according to me is happening, is actually in the Chinese markets and the Hong Kong markets. Today, Hong Kong markets was at 3.6% up, approximately in intraday, 3.6, 3.7% up. It is the highest level since February 2022. So it's almost crossing now its 3-year-old highs. I have told yesterday also that 22,000 crores of ETF buying happened in Hang Seng. I think day before yesterday or yesterday. Today again, a lot of institutions have bought Hang Seng ETF, and a lot of buying is happening in Hong Kong markets. The reason is the kind of enthusiasm now they are seeing in this deep sea kind of things, and the technology driven companies once again. In the past week, if you have seen the media reports that Jinping, the Chinese president, has met many of the tech companies, and what he's now trying to do is to ask those 10 companies to drive the growth forwards. His policies has not been able to pick up the demand. Even whatever stimulus he's given in last 2 quarters, the demand is not reviving. The confidence of consumer is not reviving. So he has been forced to go back to his tech partners and take it forwards in terms of growth. Alibaba Jack Ma was also present in that meeting. Today, Jack Ma's share was, this Alibaba was up around 12%. So, although Jinping cannot be trusted in terms of tech companies, but still, this was one thing which was going on in the markets. I think today's fall, according to me, is purely attributed to the hot money which is selling India and going to China and Hong Kong. That was the top line for me, and I have spoken this from last 2 3 days. The Chinese markets are seeing a lot of inflows. I think last month also, $1.4 trillion of money has gone from various parts, and it has gone into China for $1.4 trillion. India has lost almost $900 billion in this calendar year itself. So this money, hot money, is going into China. When it will top out? See, generally in China, people nowadays trade for very a few weeks kind of a trade. They know Chinese cannot be trusted, so they go and they have to come out very fast. So it's like a moving train. You enter the train while it is moving, and you have to get out of the train also while it is moving. You can't wait for the train to stop and come out, because then they suffer losses. This is what they've done last 10 years. So they've been witnessing those losses, and they're very sure that they have to come out. So whether this has been the last leg of selling and all the ATF money has gone there, I don't know. But is there any further scope of increase of this kind of money going to Hong Kong markets or Chinese markets? The probability is less. The probability is less. The momentum trade. See, there are a lot of people in the world which only trade momentum, and the advantage with this hedge funds and FII is that they're able to trade this kind of momentums in 160 countries. So, how much of the momentum is over? We have to wait and see. Yes, now there is a lot of hype in terms of this DeepSeek thing, because remember, DeepSeek has to compete with American companies. India nothing to do with it. In fact, no other country has to do anything with it. It's only America who has to compete. So either Hang Seng has to go up drastically, or Nasdaq has to come down drastically. I think something middle path will happen. Nasdaq is also purely overvalued. This has to fall. This should fall. It is trading at absurd levels, and we all know when things trade at absurd level, what happens. We are seeing in Indian markets how the pain is, you know, pinching us so much. So according to me, this if DeepSeek is correct, and if the technology is right, and if the AI model and if the training can be done in such a cheap manner, then probably Nasdaq has to go down, because the investments which has been done by all the tech companies is huge in AI, and that correction is warranted. Whether DeepSeek is overvalued or overhyped and probably it should not be that successful, then Chinese markets have to fall, and the hot money has to come out from those companies and go to some other country. Which country we don't know. So this was the biggest reason today of the fall. Nothing to do with any other factor. All the other factors in Indian companies are looking pretty good in terms of their valuations. Now, in terms of dollar index, rupee, whether it be track crude, any kind of government liquidity in terms of RBI rate cut, all things are probably looking very benign. No problem in that. Yes, there was a news that India is trying to bring a new EV policy, and there was a news that we want to bring down the tariff from current, I think, around 115% to 15%. We want to reduce by 100 basis points. But if you go deep into this, first of all, it was just it was not even a news report, but just some kind of a Reuters telling this news, and market reacted too sharply on it. Secondly, even if you go by the report, they're only allowed to import 8,000 units or 8,000 vehicles out of it. If Tesla has to take advantage of it, Tesla's vehicle pricing will be around 30 to 35 lakhs, in that range. We still know in India the mass market is still below 20 lakhs. We can say below 10 lakhs, but even if we take on the higher side, it's below 20 lakhs. So we don't see Tesla's entry hitting too much into Mahindra, or let's say Maruti, or let's say Tata Motors. But the reaction was very brutal. It was simply because the hot money, was just waiting for a news to have those sell kind of triggers. They did that, and probably that was the reason for the capitulation today, which happened. But see, if you understand if you see the texture of today's market, HDFC Bank was positive. Today, ICICI Bank was punished. Reliance was pretty flat, kind of a thing. Then there were other stocks also in green. So it was not an all-round capitulation. It was some targeted selling. And remember, FIIs can only sell what they own. Since they own a lot of banks, they have to sell banks, or probably autos. Auto, because of this bad news, because they know that there will not be any buying, and they can capitalize on their shorts. See, even if Tesla vehicles are here, there is no disadvantage to the banks. So why should banks fall? Why should ICICI Bank fall? So all these, according to me, are opportunities. Even in Tata Motors, even in Mahindra, all these are opportunities. These companies will have I mean, these companies have seen this kind of competition for so long. It's not that Tesla coming to India will be a success. So, what pricing, when it comes, how much traction it is, spare parts, service, uh, whether it is India specific model, people like it or not. There are so many variables out of it, and it's coming in range which is well above the levels of our mass markets. I think it was purely an overreaction. It was the money wanted to go out of India, and it was there to be parked in China, which has happened. Hong Kong markets to people are looking very very attractive because of valuations. Even after 30 to 40% increase of Chinese and Hong Kong markets, still they are trading at very low valuations. I think Hong Kong market has fallen from around 30,000 kind of levels. Still it is trading at 23,000, which is another 25% discount. And that too after 3 years. So it's probably the valuation comfort with always Chinese markets give you. But can we aggressively sell India from these levels? Again, the answer is no. Yes, 22,800 has been broken. We might see some selling here and there because of those important psychological levels being broken. But is it something big selling should happen from here or something fundamentally wrong has happened? Answer is no. Today's capitulation, and it was since a very selective kind of selling. We saw pharma going down last 3 to 4 days again and again because of tariffs, fears. Again, today's M&M, the way it has been punished, very very selective and concentrated selling just to take out the money which they want to park somewhere else. Otherwise, markets are looking benign. Yesterday also I told you that there were nine promoters. Day for yesterday, there were nine promoters who bought their shares. Yesterday there was again four promoters who bought their shares. Today also there are 3 to 4 promoters looking from the screen that they have bought. They're buying their shares. We were also seeing a buyback from one or two companies. So when these kind of things start happening, you have to be sure that the bottom is very near or it's very close or it's already there. When the promoters are buying your shares, so that is the best indication that a company or a market can give you. Please search out those 12, 13 companies where the promoters have actually buying their stocks, and I will really suggest you to buy some quantities there. Once again, once anyways the market is so down, it's giving you very mouth-watering levels. Secondly, promoters are buying it. That means they're seeing their company's profits, their business, their vision to be much much longer. No promoter will buy their shares just for the sake of buying. They will only buy their shares when they see value out of it. There was a time when they were selling their shares. That time they were thinking it is overvalued. We didn't take any cue, and retail traders are now suffering. Again, when they're buying it, we should not leave this opportunity. This is a time to enter. This is a time to take advantage. So I will surely recommend that to buy these kind of stocks in your portfolio. Also, FMCG has been falling from last 14 to 15 months. Autos indexes today is 8 months low. Uh, your banks have fallen around 8 to 9 months low. Nifty is now at 9 months low. All these are giving you big opportunities to buy an ETF. Even if you don't want to be stock specific, buy ETFs of all these sectors. I think huge benefit is still to be made out of it, and there are no fears. Again, tariff war, whatever happens, but India is the only country which is taking steps. So India already reduced their tariff on Mobo and whiskey. We already reduced the tariff on now. I think the bikes also. Probably the bikes now, the tariff has been reduced from 100% to now 30%. Now this EV policy is coming in wherein we are dropping the tariffs from this EV cars. We so various steps are already being taken, whether it is budget or post-budget policies kind of a thing. So we are sorting out the issues in terms of tariffs with US as well. Anyways, our exports are very very less and very minimal, and whatever the exports are there, those are some kind of essential exports where US will also find difficult to put tariffs. So all these things put together, yes, the market will remain fearful. Yes, the market will remain cautious. Uh, but still, you get these talks and mouth hurting levels only when there is panic, only when there is bad news, only when there is a bad sentiment. So the sentiment is bad, the news is bad, but the fundamentals are good, the macros are good. Our rupee getting stable, dollar index going down, crude being lower, our fiscal deficits under control, our rate cut cycle started, our GDP now trying to pick up, We are still the fastest growing country in the world. Uh, so all these our inflations are coming down. So today was a news that the inflation of Japan has touched 4%. The expectation was 3.6%. So imagine a developed country inflation being around 4%. Yesterday, the UK inflation also came higher. We already saw the American inflation CPI data was higher. It was around 3%. Expectation was 2.9%. So the developed markets and all these markets are seeing high inflations. Our inflation is coming down. We had an inflation of 4.21%, very close to our 4.31%. I think it's very close to our RBI tolerance band. And vegetable prices in February are also being cheap. So our macros are looking very, very good, and this will make it attractive for hot money someday or the other. We don't know which day it is. We don't know when it will happen, but it looks like it's around the corner. Yes, you might be thinking I've been telling this for long, and this market are not reacting to it. See, probably once you have a lot of shorts in the system, and if I have to make a lot of shorts in the system, they will not give a exit to the retailer. They will not give exit to the HNIs. So if we think that the expiry will be good, we'll see some fireworks here and there, it will not happen. They will not give you exit. They will not give you any expiry above those levels. They will not give you any hope trade. So forget about it. Anything will happen in February. We might touch some 22,500 levels, 22,600, 650. We might touch all those levels. I'm not denying those facts, but those will be purely trading point of view, just to have profits out of the short which you already made. How many shots will be carried over in March? We have to wait and see. March month generally has not been good for so many years because of the trades being reversed, tax collections being there in March, advanced tax collections. People try to make profits, neutralize their losses. There's so many things which happen in the month of March. So I not comment anything on the month of March as such too much, but probably I also mentioned yesterday that the big institution players only get shares when there are bad news. Yesterday also I told you that there's a lot of buying from Goldman Sachs in BSE stocks. In fact, if you see the report which has come yesterday, they have been buying many small stocks now. So FIIs have been buying selectively those stocks. So it's not that they are not buying or they're not taking advantage of it. They are entering into these levels as well. There is not so as I told, it's purely a concentrated selling here and there just to take out money and park it somewhere else. But once the momentum trade will be over in China, which should be over now, probably in some days to come, then again, probably this it will not happen in this month now. The expiry should be negative, and if the expiry is negative, we'll be closing consecutive 5 months on a row with negative close. So that's a record. I told you only two times in the history of stock market this has happened, 1986 and 1994. Consecutive 5 months we are negative. So now, if 6 month, if March also turns out to be negative, it will be a record in India's stock history. And generally, you have to have somewhat very big reasons to break history. Are we having those kind of factors? The answer is clearly no. Clearly no. You don't have any big event which can which can close your Nifty 6 months in red, which means market does not want to form its bottom. Market does not know its own dynamics, its own parameters, and it has taken 5 months to form a bottom. It's highly unlikely. So even I was not expecting this in February. Also, it has happened. It's probably a record in terms of last 20 years not happened. And I told you only two times in the history of Indian stock market. But stick histories sometimes are broken and sometimes records are broken. But sixth time when it can happen, probably the answer should be no. We don't know what will happen. The answer should be no. And if it does not happen, then I think we will be seeing some short revival rally in March. How much it will last, we don't know. But I'm still maintaining my fact that we are moving ahead for a W-shaped recovery from here on. See, mind you, one more thing. All those 5 months, we have not broken the lows with great margins. The October low was around 23, 250. Even November, January lows have been around those levels. Even if you see 27 January low was 22,800. Today we are at 22,770, 780 kind of levels. Let's say 750 above. So we are not breaking the lows with big margins, 1 or 2, 3%. We see the lows coming down, and then again the market is swinging up. No, we are hovering around those levels. It's probably a time correction for 4 months, which is killing us more. And when we see rallies, we start participating in the markets and market taking advantage of it, and it just comes down. Otherwise, the lows have been pretty protected. Yes, the highs have been lower. We went to 24,800, we slipped. Then we went to 23,800, we slipped. Now 23,000 itself, we're taking time to cross. The markets are not finding any confidence out of it. But you know, these capitulations generally end with big rallies. If you see the last 20, 25 years data, whenever you see this kind of big capitulations, we see a big revival. This time we have an event in terms of 2nd April, or let's say March also. I think the 12, 13 March date will be coming when those 1 month will be over for Canada and Mexico. I think for steel aluminum also, 15th March or so is the date when the implementation will start happening. So let's see how it goes and how this tariff war pans out. But as of now, Indian government is taking some steps at least to appease Trump. How much they will successfully, don't know. But it's looking that we're taking some steps. Apart from India, I don't think many other countries are even attempting to do that, except for Europe, where they're, I think, trying to take the spending of defense to be higher. Anyways, they have to do that also, because the way US is supporting Russia, it's actually getting dangerous for Europe, because they have been relying too much on NATO arrangement and US a lot. But if US tries to show their teeth and claws, then probably they have to find their own way, and they have to bring the defense spending up. They have no choice now, because now suppose if US stops the aid to Ukraine, then they have to just depend on Europe. And Zelensky has been moving from country to country to find support, because in Saudi Arabia, I think day for yesterday, he's looking for some economic support there, because funding from US is now starting to stop. So anyways, we'll not go into those parameters. Coming to our markets, I would say we're still at 22,800 kind of level. 50 points here and there does not seem like it has been broken. But yes, psychologically we have closed below 22,800. But looking at the parameters, looking at whatever uh, issues were there in terms of our markets coming down, except for small hot money going to Chinese markets and probably our earnings not picking up, if we just focus on these two things, probably we should solve our problems. So this is what my analysis is for today's day. Let's hope for a better week in the coming week. Let's hope the trade happens better and we see some green, because 13 days consecutive we are seeing red. Our minds are spoiled, our mood is spoiled, and it just don't take any heart to see so much of red all long. 13 days consecutive Nifty being negative, I mean, it's really heartbreaking. It's really, really heartbreaking. So let's see if at least we see some green shoots in the coming week. Should happen. But again, the market will not give a good exit, so that you should be careful. And let's see what will happen next week. Hope for the best. Thank you so much for today's video. Thank you for your time. Thanks.